All right, hey everybody, DayTraderRockStar here, and this is for the high probability watch list for the last week of November. It will be November 27th. Happy Thanksgiving! Everyone should be done with their Thanksgiving, given meals by now. And I apologize if my voice is still out of whack because I have been fighting a cold. So it's really going to do the best I can on this, but we're going to jump right into it. I'm excited to do this video. First part is going to be more of looking at the market conditions. I'm going to show you some things. Second part, of course, it'll be the watch list and maybe some other things. But we're going to try to get through this pretty fast. The interesting part is today, when this is going out Friday, the market was open for a half a day. Not much happened. Basically, the market started off or closed where it started off today at 9:30. 2601. All right, we're banging around this 2600 level. Typical day. This is a typical no volume, nothing day, but you can actually see a little channel here. I was trying to watch it a bit. I wasn't really too concerned. I wasn't feeling good. So the day ended, and that's where we left off. But it just shows you on a bigger picture how strong this market is. And you know, I took a few. We actually did call for a pullback here last week, and we got that pullback. But since then, it's been moving back up here, and lots of times, if you're going to call a top, you're going to make a topping call up here again, back up by the recent top. You're either going to make a lower high, or you're going to double top, or there's going to be another reason. And it had this little trend line. So, you know, there was a little in me that expected maybe a little pullback when we get a move down to this line. It did not happen, and it made me just realize how strong this market is. And every time I look at the S&P, and I don't want to make myself sound kind of like silly here, but every time I look at the S&P number, it's 2,500, 2,600. It seems very small, you know. And I know I'm not doing the calculation of what it means and stuff, but in this day and age, numbers like this, you think that people say, oh, this is way overbought right now. Under what measurement is overbought when it hasn't ever been to a level before, you know? And when you look back 10 years, how much of a mistake that will be calling it that. So I don't go by any of this, overbought, oversold, valuations out of whack, PEs and stuff, because if numbers worked and those things mattered, a lot of other things would be hitting the fan way before, it's showing up on the stock market. I mean, we talk about, I was just doing some research before, and I said, all right, what's a good reason, and again, this is more of a broader outlook, but it is also short term, because right now the market is acting like it is just cruising along and there's no problems. And really, whenever we see the market pull back, there is usually an underlying problem or an uncertainty about it. And everything seems to be pretty certain. It's not like everything is running smoothly, especially with the political situation, and there's North Korean stuff, and there's other things going on. But internally, I mean, just how the wheels are moving here in the USA, the market does not, it takes everything in, and it sees it for what it is. The market is a true indicator of how the world is doing, or at least how our economy is doing. And it is a true indicator of it. It really is. And when you look at 2,600, I'm like, all right, but we're going to be looking back at 3,000, and these things are going to continue to push higher. And you're going to say that's going to be impossible. I said, why not? We're so young in the beginning of this phase that we're starting to see this technology boom. And everyone's saying, well, it's costing a lot of money. Yeah, I was looking up. I said, what was the U.S. national debt? I said, what's the U.S. national debt? So I looked it up, and I went over to this little clock over here, and I said, all right, wow, it's $20 trillion. It's getting to numbers that I can't even read. I'm like trying to figure out some of these numbers. But it's ripping higher. And if you get you take a look at that, and you look at it on a basis like this, and they say, well, that's what good is that? Why do we know? Why do we even need that number if no one's paying attention to? And if it goes up, how does it go up? Well, this is the chart of it. So who says it's going to turn back down? It's never going to turn back down. That national debt's going to be it's going to be 100 trillion down the road. This chart will continue. The S&P 500 chart will continue. The Dow chart will continue, and more money will be generated. And and that's just the way I look at things, more of a kind of a logical just overview of what I see going on. It's just, but I'm not digging down into the books and saying this is, we're due for a pullback here. It sure does look good, and I think, and the last thing I'll say about this, on my little rant, I don't think anything happens here with the market unless something actually happens. I think there's going to be buy the dippers coming in until there is something proven out there that's going to cause this market to pause and pull back. Something that's going to affect the valuation of America, basically. So, so going into next week, gotta be, and again, going into a holiday season. This was a very good holiday season. I mean, slam dunk today was, or a layup, was Amazon. I mean, Amazon into Black Friday, right before Cyber Monday, Amazon was up 30 points today. 30 points. And I noticed it early on. It was only up 10 points. Now it's up 30. I closed the day up 30 points. But other things, we're going to go over those stocks here in a second. Anyway, like I said, I hope I didn't, come off acting kind of foolish in my analysis of where these markets can be going. But things are just getting bigger. And that's how things are going. These numbers are someone made money putting this stuff together one time, and it was useful. But now all this stuff is changing. The whole world is changing. So what worked yesterday doesn't always work today. But we're still going to trade what we know. We do see that the underlying indicators continue to kind of map out the charts for us, and if we could actually wait for a setup. Like I said, go back to one of our playbook plays or a divergent setup, we're going to be doing fine. So that's okay. Market that needs to go up, that's fine. I want to be very cautious on trying to short it again. I did take some shorts. I covered my MasterCard today. I mean, that was like and the reason I did that, I knew I was getting myself into an issue because there was like a little divergence on it, and I wanted to believe in that the divergence, and it was right here. And it actually held on for quite a while. It actually held on, and then it started breaking out. So I ended up just taking that. I said, that's just fighting a losing battle. The divergence was there, and it actually, it stopped its momentum. But I think there's just too much pressure in the market. And all these stocks that are moving higher, like this one right here, MasterCard, they're going to continue to move higher. The mega corporations, what's going to survive, and everything else is going to be nothing. Honestly, everything's going to get sucked up into these big mega corporations, and the U.S. is going to, everyone's going to try to stop it and stuff. But these companies are getting very big, very fast, and they'll start, and that's where money's going to go. No one else is, if you're not giving us a chart like this or giving us a 30% return every year, then I'll go into someone that is, I mean, that's what it seems like we could be doing for the next couple of years. This is just the beginning, just the beginning, even though it's here. But this is where I'm going to give you another stupid analogy. This is the age of this is dinosaurs here. We haven't even gotten up to where we should be. We're going to look back at this as the Stone Ages. Yeah, you remember those stupid phones you used to carry around? We lived off of them. Now we're going to have, chips implanted in our head. All right, let's move on. But like I said, a chart is a chart. You're not going to call the top on these things. It's going to be impossible. There's your debt. Let's move on. All right, I want to jump right in. I'm not actually showing you the update. Well, I'm showing you the current HPS watch list, and as you can see, the streak has been going well. Not much activity this week because it was a 3-day week, and with the holiday and the volume and everything, and it's just dead. But we're going to go over the setups here. I'm going to put that out there because we are in that kind of a holiday little mood here, and the good thing here is, everything's working out. It's taking its time. That tends to happen sometimes on these swing trades. And remember, each HPS setup that goes in here is a swing trade. If it happens the first day and it gets its target, oh, that's great. But an ideal time frame of an HPS is like 3 to 5 days, and that's what I like to do. So we'll start off here looking at a couple of these that are currently active. And again, I did a nice talk up on this one in last week's video, but I'll just kind of talk about it again. As you can see, we have 3 more days to add to that, and we actually started breaking out of the channel, which was perfect. So have a nice profit on this. Which one are we looking at? Hold on, let me make sure I got the right one up here. I want to start with Liberty. It is Liberty, yes. So I lose my symbol over there because Discovery too, but I don't have the profit yet on that one. But the Liberty here already starting to move up. We're at 30. What was it? 30.70. And we're starting to consolidate. And there's a lot of reason why we're moving up like this and we're breaking out because of the coil stochastics. It was a really good HPS setup. It's not completed yet. We actually can pull back a little bit further here and then move back up. So I'll still be watching it and still in it. And then the other one is Discovery, and this was an interesting one too. I really like this one a lot. The bad part about this one is the cheap price. Under $20 are like a thorn in my soul. And it's weird. I don't know why. But typically these stocks that are cheaper are falling out of grace, and they could break down on patterns. Here we had 2 patterns. We had a nice downward channel, and it broke down out of that channel, and now we have a steeper channel, which is great because we tend to trade out of this channel back into the original channel. And if we could identify that time frame, and usually if it's in a downward channel like this, and you have a divergence, and it's not a 100% divergence. It's not the qualified one where that second stage has to be above 20, but there is a slight divergence there, and the steepness of the channel. Want to buy it on strength, so it did trigger. It triggered yesterday or something, and then it pulled back a little today. But you can see it's trying to push through this. It's right at its trigger point, So still an active trade, not much going on, but I still like it. It's not a big one. It's not gonna. I don't think it's gonna. Well, you never know. It's one of my takeover trade ideas. Also, Discovery, DISCA. All right, this next one up here, I haven't been really following during the day, during the show. Archer Daniel Midland. I have it as a HPS setup. I'm not in it, but I actually like it. I want to actually show you a different view of it first. Well, you know what? This is the trigger. There's a little downward channel here. See that little downward channel? There's a couple pivot areas. It gapped down, showing some weakness, and it came down to a retracement trend line, which was part of an old wedge pattern. And so I'm just looking at it, confluence of trend lines. Kind of an X marks the spot right down this level, and the green line represents a buying on strength. Buying on strength. Basically, we're going to be buying as it moves up instead of buying on the pullback, which lots of the HPSs have. This will be buying on strength. So it has to show some strength for us to get in it. And it says watching. So if it says watching, then it's not active and it hasn't hit its hit its trigger point yet. So let's fast forward. And as you can see, it's just chopping around sideways. A little sideways chop. Again, if it does break through that level, I think we're going to be breaking out. Especially the more we go sideways or down, that level will definitely be a breakout level. We'll have to adjust this next week if it doesn't trigger in the next week. I would adjust it. That also was showing a slight divergence to it, I believe. And I want to just take a better look at it. All right. The weekly was also oversold. Yeah, there's a lot of interesting things about this one. Yeah, the little divergence up here. Yeah, it still looks okay. It actually looks fine. It's just it's biding its time. It's something that needs a catalyst here. But I think something's interesting about it. How we're starting to hold strength even into this little kind of candle today. This is still really kind of pointing higher. I like it going into next week. Definitely going to put it on the top of the screen just to kind of keep a good eye on it in case we want to jump in it. It's very, a good possibility. All right, let's just continue here. Sienna, the Alaska Airlines already hit its target. The Smuckers hit its target. Beautiful. These are, and again, I always recommend going back to the HPS site, open those charts up. They continue to update and watch the previous trend lines. Every chart that comes along on this is usually broken down into a very good technical layout for you. So if you see, I like to go back each week. That's why I keep them just all on here. So you can go back and you can actually look